Daimler reported a higher quarterly profit on Friday. That was despite a 30% drop in Mercedes-Benz unit sales due to a global semiconductor chip shortage. The German premium car maker said it should meet its 2021 profit targets. It expects chip supplies to improve in the fourth quarter, but warned the shortage of semiconductors will remain an issue next year. The chip crunch has pummeled the auto industry for much of this year. A number of car makers shuttered plants as the global health crisis took hold last year. They also found themselves competing against the sprawling consumer electronics industry for chip supplies, and supply chain snarls from a fire at a chip-making plant in Japan also hurt. Daimler said it focused on more profitable models, including its Maybach and Performance AMG brands. It expects Mercedes-Benz to post slightly lower sales in 2021. Daimler's car maker posted a quarterly operating profit of $3 billion, up 18% for the same period in 2020.
Just one day after their top execs were grilled by congressional Democrats for allegedly misleading the public about climate change, the biggest of big oil in the U.S. pumped out their strongest results in years. ExxonMobil and Chevron reported Friday that they had swung to a quarterly profit from a loss a year ago. $6.8 billion in Exxon's case, its best result in 4 years. $6.1 billion for Chevron, its most in 8 years. Fueling those profits, rising energy prices. The prices for oil and gas more than doubled in the past year. Supply shortages pushed oil to a 3-year high during the quarter, and they're now trading near a 7-year high. Exxon and Chevron have doubled down on oil production. That sets them apart from their European peers who are shifting into solar and wind, something they were grilled about by Democratic Representative Ro Khanna at Thursday's hearing.
I don't believe you purposely want to be out there spreading climate disinformation, but you're funding these groups, and they're really having an impact. You know, they're spending millions of dollars in Congress to kill electric vehicles, and they're spending millions of dollars against the methane gas.
The company's results also come as President Joe Biden heads to Scotland for a climate summit after trying to unite his party behind the $1.75 trillion climate and social spending plan. Shares of both oil producers rose in early trading Friday.
Move over, Apple. There's a new corporate king for Wall Street. Microsoft took over the crown and the title Friday as the world's most valuable company on the stock market. Apple lost the top spot after a slide in the stock sparked by disappointing quarterly sales figures and a warning that sales in the all-important holiday quarter could be further rattled by the worldwide chip shortage. Some analysts point out that compared to some other popular tech names, Apple is a lot more exposed to supply disruptions. Apple shares are up roughly 11% year to date, but that pales in comparison to Microsoft's 47% gain so far this year. Microsoft is riding high on its booming cloud business Azure, boosted by solid demand during the health crisis. The two companies have waffled back and forth in the top spot on the stock market since Apple overtook Microsoft back in 2010, thanks to the global popularity of the iPhone. Both have stock market values greater than $2 trillion. Apple shares were down in Friday midday trading, while Microsoft's stock touched a record high, putting the computer company back on the throne, at least for now. Wall Street fluctuated between gains and losses on Friday, but ended with the S&P 500 and Nasdaq at record highs. The Dow gained 89 points. The S&P 500 closed above 4,600 for the first time ever. The Nasdaq rose 50 points, putting the finishing touches on making October the best month for the stock market all year. Elevated inflation readings continued to show up in corporate results and economic data. Consumer spending topped forecasts in September as the Federal Reserve's favored measure of consumer inflation remained quite high. The Personal Consumption Expenditures Index, excluding food and energy, was up 3.6% in the year through September. It's been stuck at that lofty level for 4 months straight. Nancy Davis, Chief Investment Officer at Quadratic Capital Management, believes the prolonged inflation spike is leading the bond market to price in several rate hikes from the Fed.
The rates market is having one of the most volatile weeks that I can remember in my career. We have over 5 full hikes being priced in before the end of 2023. I personally think that's a little aggressive, especially with the taper likely coming later this year and going into midterms next year with the US election cycle.
Stock investors, however, remained focused on earnings for the time being. ExxonMobil posted its strongest quarterly results in 4 years, thanks to oil and gas prices that have more than doubled in the past year. Meanwhile, Chevron announced its highest profit in 8 years for the same reason. Shares of Chevron touched their highest since early 2020. Not all the earnings news was as good. Starbucks posted disappointing same-store sales growth led by weakness in China. Shares of Starbucks were down more than 6%. But the stock of the day was Microsoft. It hit a record high, allowing it to knock down Apple as the world's most valuable company on the stock market. Microsoft up more than 2% for the day.
The spread of the Delta variant did not stop resilient Americans from spending in September. The Commerce Department reported Friday that consumer spending rose 0.6% last month, topping economists' forecasts. But it slowed from the 1% rebound in August. Part of the reason Americans spent more money, they had to shell out more to buy what they wanted. Inflation remained hot amid shortages of cars and other goods. The Delta variant worsened worker shortages, disrupting supply chains. Automakers had to boost prices because a global chip shortage hammered vehicle production. Those price pressures reduced consumers' buying power. Consumer spending is closely watched because it accounts for more than 2/3 of U.S. economic activity. On Thursday, the Commerce Department reported that growth in consumer spending hit the brakes in the most recent quarter, falling to a 1.6% annualized rate from 12% in the previous quarter.